The Fed is raising interest rates. Now, you've likely heard this phrase on the news or across social media over the past couple of years. Interest rates have a profound impact on the economy as well as all the different financial markets. Commercial real estate is no different. And by grasping the nuances of how interest rates affect the market, you can position yourself as a strategic investor in a variety of economic circumstances. Whether it's seizing opportunities in a low-rate environment or weathering storms during rate hikes, your understanding of interest rates can be the compass guiding your commercial real estate investments. So let's get started. Let's talk about interest rates. What are they and why do they change? So interest rates, simply enough, is the cost of borrowing capital, right? So, that's what a bank or lending institution is charging as a premium in order to borrow capital. Why do they change? Well, there's two forces really at play. There's the market forces of supply and demand that are driving the effects of the bond market, which really drives long-term interest rates. And then you also have the Federal Reserve that's setting the overnight borrowing rate for banks, and that tends to affect short-term variable rate loans such as car loans and credit card loans and bridge loans in various forms of commercial real estate. So one of the key components of commercial real estate is the financing costs. And this is where interest rates play a critical role. We did another video that talked about underwriting, and your financing costs are a critical component, and your interest rate is a huge part of that financing cost. So, when you see, and again, it doesn't take a lot of inference here to look at, but again, if you've got interest rates at 4%, you can afford a lot more borrowing capacity than if interest rates are at 9%, right? Because again, you're paying a higher monthly premium to the bank for that capital, so you've got less money left over. And so again, that's where interest rates are very much an influence on the value of real estate, because as interest rates are coming down, like we saw for the last decade, that helps to fuel values and ease of capital and ease of deals. And now, as we've seen in the last 18 months, as interest rates have gone up, that begins to constrict values on real estate because of the cost of capital and the financing cost. Next, let's talk about interest rates and how they affect the supply of commercial real estate. So what that does is, as interest rates rise, it makes it tougher for buyers in the marketplace in terms of being able to purchase properties. Now, again, conversely, depending on the owners of commercial real estate, there are, right where we stand right now, plenty of owners and plenty of loans out there that are what are called variable rate loans. And as interest rates have risen, that has negatively impacted the property. Those properties are actually going to become or necessitated having to be sold because they're unable to continue to perform. And then as a result of that, that can increase the supply in the market. Now, again, as I said, conversely to that, that does also at the same time constrict the amount of buyers that are able to execute at a certain price. So then what happens is price has to fall in order for it to make financial sense in your underwriting. Interest rates, when you take a step back from just looking at the property, have a broader effect as well, because again, like we've seen in the near term where the Federal Reserve has raised interest rates the fastest that it's done and the highest it's been in 40 years, what the impact of that typically has is it can have an increase in unemployment. Companies slow down because their cost of capital is increased. It can affect consumers where, they have a higher debt burden, so they're spending less money. It can affect residents at a community because there's higher delinquency because they're struggling now to pay all of their bills. Because again, think about, some credit cards went from 17 to 22, or, car loans where people were going to take out a car loan went from 7 to 13%. These are all things that affect tenants and residents, and they're affected by these changes, and it can be an additional burden on the apartment or the community. And so it's important to be able to understand how overall interest rates, both rising and falling, affect the overall economy and then ultimately affect your investment. One of the last things I'd say with respect to interest rates is, again, it's important to understand as we shared in a previous video about market cycles, but also being able to understand the economy, how interest rates interplay into it, and what is a reasonable expectation of where interest rates are going, because that affects your investment. Now, again, for me personally, I go back to my underlying degree is in finance, a degree in economics, spent 15 plus years as a stockbroker and a money manager focused on the mechanics. I actually enjoy, that's why I got the degree also in economics. I enjoy economics. And so I'm focused on that on a daily basis, looking at that, discussing it with our team, and then understanding how those mechanics affect what we're doing right now and also affect what we're doing over the next 3 to 5 years. And so it's important that you understand it, or the people that you're investing with understand it, so that you're not left to the winds of uncertainty. I have a free gift for you in the description of this video. I'm here to keep you informed so that you can make the best decisions when it comes to investing your hard-earned money. And I've created a free guide to help you on your real estate journey. Click the link below to check it out. That's all I have for you folks. If you've learned something today, make sure to like this video and subscribe to my YouTube channel for more content on real estate investing. See you in the next video.